Dr. Mark Wilson here, taking you through the company's financial statement preparation exam from 2022. Already you will have completed this part here, which is the resource, and adjusting that. Note at the bottom I've got the changes in equity, which we'll need in doing this. So question A, you have to complete the following information relating to the interim dividend. Nice easy question. If we look over here, we see that there's an interim dividend paid of $30,000. So we're going to pay our interim dividend. And that's $30,000. And the credit entry is simply bank. Because in the question, it's got a year here, we're going to add a year as well. Question 1 done. Part B is to do the contributed equity ledger. So really we're following this bit that we've got down the bottom here. It tells us that our opening balance at the start of the year, which is this one here, we had 410,000. And put CR there as the credit balance. And then on the 1st of July, which is the date here, we issued 20,000 shares. We received cash for that because it was done through the broker. That was GB Brokers, and they paid us 48,000, which takes our closing balance to 458,000 credit. And that's pretty much what we've got here. That's all we need. On to the next part. The distributions for shares. Remember, we have to do a solvency test in order for this to happen. But the distributions is what we've paying out to shareholders for dividends. In this one, there's no share repurchase or buyback, so we don't have to worry about that. If there was, then that would be here as well. So we've got last year's final dividend. And that figure has been given to us over here. Final dividend, $72,000. What you've got to do is calculate the cents per share. We've got $72,000 paid out. And at that point in time, we had 180,000 shares. So 72,000 divided by 180,000. Do that on a calculator. And hopefully you get 40 cents per share. We've got the interim dividend for this year. And again, the figure we know is 30,000, so put that in first. And looking at the date that was paid, it was the 15th of December, the second to bottom bullet point you've got. And at that point, that's after the July 1st. So we've actually got 200,000 shares. So 30,000 dividend divided by 200,000 shares is a 15 cent per share. So the total dividends paid or distributions, 102,000. Again, note that we haven't got any share repurchase here, so we don't have to include that. The next bit is writing the dividends declared after reporting date. For the merit market, and that's what you have to do is copy on 15th of May 2022. So just type or write in the bottom bullet point. $0.35 per share. And the last part of that mark is actually to identify how much it's going to be. So we've got 35 cents multiplied by the number of shares, 200,000. Get your calculator out. All right, and so you've got to have the figure there to get the last mark. All right, 35 cents, 70,000, and the date. All those parts are done. Excellent. Current liabilities, nice and easy. We're just taking them from the credit side here. So first one's accounts payable. Next one, The loan, see the date on that loan? And lastly, we've got our 3 balance day adjustments. And put the figures in. All right, with a total of 101,400. All right, press pause if you need time to catch up. Moving on to this one. So here we actually have to do a little bit of writing. So there's 2 parts of the writing here. Number 1 is to look at the revaluation of the shares on current assets and on the equity. So the first mark is really looking at current assets, and the second mark is on the equity. I'd encourage you to do this as 2 paragraphs so we make sure we answer both questions. So the financial assets are reported in current assets. So basically we're saying is the shares in RXL Limited by $4,000. Right. And the second part, big paragraph A, retained earnings. So retained earnings, first part that decreases. Because therefore reducing retained earnings. Probably what you want to do here is say reducing the profit by $4,000. Remember that's a profit before tax, not after tax. Easy, these are 2 paragraphs. Then what to do is question 2, up to that already, awesome. So question 2, what are we looking at? The journal entry for the revaluation of the buildings. So we've got to transfer or close the accumulated depreciation. So we're going to debit accumulated depreciation. And this is part here. It was 12,000 and it's going down to 0. So we're going to cancel it by putting 12,000 debit, which crosses it out, which you've done here. And the credit, make sure you indent first. Go to buildings. If we're looking at the building revaluation surplus, we're going to start off with a balance. And that's at 47,000. Remember, that's a credit. And that's going to go up by 27,000, as you did here, from 20 to 47. Oh, we did that wrong. That starts off at 20,000. I did it wrong, my apologies. It's going to end up with 47,000. And the debit for that was buildings. And remember, we put 27,000 onto the buildings. Therefore, we add it to the building revaluation surplus. Happy? Good. Next part. We're going to look at the profit before tax. All right, profit before tax, 263,000. Then we've got the tax expense. So the tax expense we'll find over here, and you'll see that the tax expense is 73,600. So the profit after tax is that one less this one. I'll just do that calculation. 189,400. And other comprehensive income. The other comprehensive income was at 27,000 that we've just had a look at. So that's called gain on revaluation buildings. Right, so that's our 27 that we've just put in. And so that means our total comprehensive income and that's your 189 plus 27. Good. Hope you're happy with that one. The notes to the accounts, the revenue. So we're looking for revenue items here. So because we go rafting, there's two major forms of revenue. You've got the accommodation one, and down here, I believe, you've got your rafting revenue. Just be a little bit careful you don't put your dividends revenue received in there. That comes under other revenue. So it's not the main form of revenue. So just type those two in. Make sure that's a 388. And the rafting revenue, obviously more points because you've had to adjust it. 630. And again, total those two. Great. Property, plant and equipment. So looking at the buildings themselves, so the opening carrying amount of the buildings is going to be that 450, the opening balance, minus the opening accumulated depreciation. 450 minus 10 is 440. Then what we're going to do is less the depreciation. And the depreciation on the buildings is just at 2,000. So I encourage you to put that in brackets. And then we had building revaluation. Or we put plus revaluation, I think. So we've got 440 minus 2 plus 27, and that will be 465,000, which is this figure here. And the last part, doing well, is to explain the impact on provisional tax. Sorry about that. Provisional tax. There we go. Provisional tax, the 52,300. Basically, you've got to write what that represents. So it means that during the year, go rafting, paid. Remembering this is in 3 installments, so 28% of the estimated profit. You can add that in if you like. This payment is, well, payment maybe to IRD is and that's what you did already. So you've done it here. The next part of the question is, again, a different paragraph, how the provisional tax impacts current liabilities. So saying provisional tax paid reduces